Good morning, everybody, and welcome. This is your S&P day trade setups for today. So, Feds came out with their song and dance. Interest rates stayed the same, and we plummeted just because of the outlook. The outlook was rather hawkish. In other words, they were looking to, explaining that they were going to still raise the interest rate still. But then what happened was that the Chinese came out and reduced the interest rate, which then forced this tail. Now, this is a massive, massive, massive hanging man. Okay, it's an engulfing bar on the 8 hour of the previous 8 hour bar, and it is a massive tail. So if you just look at this, it's almost 1% move in the market, which it fell and then came back. Oscillators all grip the upside, so when you see this kind of thing, I'd be very, very wary. And I just want to get these weekly levels in because this is kind of what we're going to be tracing going into the close of the week. And there's basically two weekly levels here. So it's this one here and this one here. So if anybody's on MetaTrader 5 and has had this problem before, this should be a little triangle and it's a weird U, and you solved it, let me know what you did, please. I'm pulling my hair out. I can't fix it. Anyway, if we get down to the 8 hour, again, move up, it consolidated into a bit of a wedge, and we broke the wedge to the downside. So if you start looking at the lower time frames, you're going to see rejection bars here, range bars, rejection bars, then a massive pin bar. Now, when you have a pin bar at the top of a move, it's a warning. Okay, it's not necessarily off structure, so you would have wanted to see a pullback, then the pin bar, and then move. It would still play out if you got above this tail of the pin bar. You got a 3 hour close above that, then you'd be back on this train with a move to the upside. But at the moment, you've got a crossover of the moving averages. They have pointed down. One of them is below the 80. When the next one gets below the 80, it's either going to pull back onto structure or it's just going to drift sideways. Well, that's kind of the lay of the land. We've got a lot of data coming out today again, so I think you're still going to be in for a little bit more volatility. So have a look at it on the hour, and like I said yesterday, just sit on the sides and wait until the Feds have finished their song and dance, and you can see there's their song and dance. Very difficult to trade that kind of stuff. You can see all your levels. You would have just panicked if you were in over there, because it would have moved down almost 200 points past your level before turning around. So it's very difficult to get into these things. And so typically, the advice that I always give and what I do myself is just sit on the sides. I've been burnt so many times, but on the flip side of the coin, I've also made a lot of money during data releases. But when you just work it all out, at the end of the day, I probably barely break even. Okay, so what is the plan for today? You've still got more data coming out today. I'm a little bit wary of what we see at the moment. Also, it's a lower high, but what you need to do here, let's just get the 15 minutes and then we can do this. So there's your 15 minutes above and below the moving average is complete confusion. But the thing you do need to pay attention to is that trend line. Okay. And then, which is the concerning one, is that trend line. So you've broken to the downside. Where is the apex of the triangle? Apex of the triangle is right there. Look to the left. You see the structure here? Okay, so that's also important. So I'm just going to lock those levels in. So we had a consolidation, we had a consolidation yesterday. This up and down was pretty much consolidation. Started falling because of what happened in the US, started rising because of what happened in China. So this is kind of just confusion. And moving averages are flat. Oscillators are, granted they've crossed over, but they're actually all over the place. There's no real structure here. And you've got two pretty strong levels here. So the first one is this here, which is 43.81. and your second one is down here at 43.54. One thing to bear in mind, remember we had this gap here, there, and you can see how that gap is now closed. You can see I've got a body that closes below that gap there. Always pay attention to those gaps. When you see a gappy move, the probability of it coming back to close the gaps is always pretty good. So for today, I think sit on hands, wait for data again. It's going to be just before the market open. There's a string of data coming out, and then gauge to see what's going to happen. If you recapture this level, 43.81, which is the apex of the triangle, recapture, come back, build a base on there, in other words, test it, then I would expect to move up. If you reject this level, then I would expect a move down. Now, the only problem I've got with rejecting the level is where the moving average is at the moment. So there's a higher weighting on a long rather than on a short. So dropping below the lows of yesterday, that's going to trigger a bigger move to the downside. And if you just come back to the 8 hour, that would be telling. Okay, so there's your big tail, drop below that. That is a bearish setup, and you'd be looking for a move at least down to 43.26. Then you'd want to see this gap close here, which would be 4,300. 4,300 for me would be a fairly decent area to start looking for longs. We are parabolic. That's the other thing you need to bear in mind. You can see if you draw a line along the bottom here, you can see there was a gentle slope, there's a steeper slope, and then the even steeper slope that's broken. So whenever you see this kind of pattern as well, it's always you're coming nearer to a top, and you'd be expecting some kind of a pullback. But this will get tested again before a top is in. So you need to go with a trend, and that is long. Okay, so anyway, that's kind of my view for today. Pay attention to this structure. You've also got a daily gap at the same level, so pay very close attention to here. If you start rejecting here, I'm not sure I'd be taking the shorts, because that would break this trend line here, which we've broken already anyway. So could be a case of building a base for a move up, or alternatively it could be a rejection here to play out the triangle, and the triangle's measured move, I suppose, is also very important. There it is there. So you can take it from there. You can see there's my structure to the downside, 43.26. Or alternatively, we take it there, and we have structure right about here at 44.36. Just zoom out to a higher time frame just to see what is there on the left, and you can see not exact, but you can see a bit of support there. I don't like that support, but there is rejections there. There's another level there, there's one there, there's one there, there's one there. So there is quite a bit here. So what I would do is actually just round that off. 43.36. You probably find this going to 43, what's that, 44.20, and then the upper end of this is going to be right up there, which is probably the stronger level, which is going to be 44.50, which does make a lot of sense. Okay, so anyway, that's kind of my view. The overall trend is up at the moment, so I'm looking for pullbacks. This could be a fake out of a triangle, and then looking for us to move into the zone here, which would be the measured move. Hope that helps, and we will catch up with you tomorrow morning. Cheers for now.